Hello everyone, good morning. Just solving a few technical difficulties as usual, because you cannot go live without any issues. So I hope sound is great. If somebody can let me know. And we will get it started in a bit because, oh boy, what a week it was. It's one of the craziest weeks in crypto ever, I think. So, if sound is okay, music not too loud, then let's get started here. Hopefully my voice survives this stream. Still the post-virus issues. But it's getting better, so hopefully we'll get through it. Alright, so quickly checking the markets. Europe a bit mixed up and down. US pre-market in the green, but we have to see how that keeps up. Quite often lately pre-market is green and then around market open it just jumps down. Thanks Bravco for the audio check. Crypto is pretty good so far. We got oil taking a pull back because obviously China is being hit again, and that means less demand for it. Gold floating around zero, pretty much the metals except platinum and palladium. Biggest use case for those is the car market, so that's probably also based on the hopes of the Fed pivot. Gold has been doing pretty well the last few days. For the rest, I think the charts will do better justice to this crazy market at the moment. Looking at the calendar, today the big one, producer price index inflation, and it's expected to stay the same, but this could be a market mover if in a couple of hours this goes bad. It's like the CPI, but then for producing all the goods in the US. Pretty interesting one to follow. And if you see, it's a bit been erratic, but I think we will see a small rise, that's my guess. So let's see if it hits 0.5, 0.6ish. That would definitely move the markets. For the rest, retail sales, the end user confidence pretty much tomorrow, and some housing and home sales stuff coming Thursday, Friday, but I think this is the real market mover today, so interesting to see what's going on. Diving into the charts, if they will work. There we go. So what a week it's been with the whole FTX disaster happening and all the consequences from that. I hope nobody listening got hurt too much and managed to pull out all your funds in time before it got shut down. So I think this is this bear market is the great purge for crypto, shaking out all the scams and all the frauds and all the hot air balloons out of the market. And those who survive have shown resiliency and strength, and deserves a bit of confidence when this bear market is open. So it's a painful process, but I think it's highly needed. It was very highly needed to cleanse it and get rid of all the trash in this market. So let's see how the next month go. I don't think the bottom is in yet, personally, and let's take a look at some charts. So if we look at the DXY US dollar, it broke away from this channel That could have been a bit of a bull flag, but it broke down so far, but it hasn't taken out this major level here around 105. It's still, if you look at this could be just a normal retrace, and it's purely fueled by the inflation softening a bit, getting a bit less worse. So I think the euphoria on the CPI figures are a bit strange, because we still have a sky-high inflation, but it's just getting a bit less bad. Will it be enough for the Fed to pivot? Well, with the job, all the employment figures still pretty strong. Everybody's betting on the 0.5% rate hike next meeting, but I have a bit of doubt. So let's see what the Fed does in this case. Obviously, we also had the midterm elections in the US, where I think they're still counting. So that's also always a week of uncertainty in the markets. DXY at 106, I think 105 is a very nice target, making a slightly higher low here before possibly bouncing and going to test that 110 level as resistance again. If we switch to the weekly quickly, obviously last week we had a very strong move down, but overall it just could be the first decent retrace really we had in month. So we had this little retrace here, this little one here, this one here, that just first decent retrace in a long time, so no surprises there. We see that trend profit called this one on the weekly perfectly with the TD sequential 9 and the trend momentum flip just exactly like it does here. We're now at 5, 6, 7, 8, 9 weeks. In December we might get that pivot to the upside again when the winter hits. So interesting to see. On the daily we are hitting count 8 already, so the next few days is a potential reversal zone, and we're just gonna watch that. Momentum, trend momentum, waiting for it to curve up in the next couple of days. We do get some exclamation marks showing a possible bottom there, or at least a pause in the downtrend. So interesting zone for the DXY to be in. We look at bond yields. Obviously they also had a bit of a pullback, quite a bit actually, but even also here in the bigger scheme of things it's just pretty normal. We have a bit of a different picture here with that potential double top playing out, and here the next level of support is around that 3.5-ish percentage. So a bit more downside, and if same as the DXY, and if those two keep going down, then the current rally in stock market will probably continue a bit. The big question is, what will Bitcoin do when that happens? Will the macroeconomical factors overrule the footstorm of the whole FTX drama or not? So interesting to see. Also the reaction of the euro. It hit its zone that had been drawn for ages perfectly. It bounced off, but let me just remove this one for clarity. If we look at the weekly chart, we had the top in January 21, solid downtrend now, and inverse obviously of the bond yields and the DXY, the first decent pullback. We're not even making the 382 here at 1.06 dollars. Bit more space to the upside. And if we look at the daily, we see we've been hitting that 200-day moving average for the first time since June last year. So very nice level to see what happens. Maybe we also, the 200-day moving average has been quite often support and resistance, and we're finally testing that one as resistance now. Obviously it's DXY bond yields and the EURUSD are completely related to each other. When one goes up, the other goes down. So as we had an 8 on the DXY, we have a red 8 on the DXY, we have a green 8 on euro dollar, so that's not there's no divergence on that one. Looking at Bitcoin, we broke down from this zone because of the whole often mentioned disaster that has been on everybody's mind lately. But it has not been a move like this in magnitude. So yeah, it was a bad dump, but the important thing is what was the follow-up action of this dump. And I'll switch to another chart in a bit to show you some analysis on that. We did hit a perfect black swan bullish harmonic here. And we're now pretty much going sideways a few days. Some volatile candles here. So we at least want to break above that 1700 level or below that 15700 level and hold these levels before we can say anything definite on the next direction there. We'll go back to and this chart doesn't load again, never mind. We'll come back to Bitcoin in a bit more detail. Bitcoin dominance making a much higher low so far, pretty much confirming that breakout level here. I think Bitcoin will outperform the altcoins by quite a bit in the next move, either to the upside or the downside actually. So it's not the time to start looking at altcoins yet, in my opinion. Obviously, if you are a trader that likes to scale in very slowly, dollar cost average in, current levels are a pretty good place to start slowly accumulating. Be prepared to do that for another 1.5 years though. But DCA, in the long term, it's a very solid strategy. Ethereum to Bitcoin. Yeah, what to make from this? I think it will go down to these levels. We had that double top. We were bouncing on that support level from here. We bounced up. We didn't break that very important 0.08. We didn't even reach it. And we bounced quickly here on this 200-day moving average. But we're still in a downtrend. So I think we'll go for that 0.06 level next. What would also be the entry point of several bullish harmonics there. So, nice entry point if you're trading Bitcoin to Ethereum to Bitcoin. Total, yeah, pretty much the same picture as Bitcoin. Bitcoin is the overall master so far. Quickly looking at stock markets. The weekly chart is not that interesting. We do have some multi-day bearish divergence there, and those play out quite often, several percentages. So even though pre-market is slightly in the up, we see that yesterday the risk factor was had more downside potential than the stock market itself, maybe with the wick. But we see that on the risk assets we made a lower high, while on the stock market we made a higher high. So clear divergence. Could obviously spike a bit more up hitting that 200-day moving average here before going down. So looks like the rally is pausing a bit. The rally that we had on Thursday after the CPI figures, it's pausing. Let's see the follow-up action. Do we hit our head against this order block and this 200-day moving average and the 200-day exponential moving average here and go down? Will this divergence play out again? Probably, yeah. It's been too strong of a factor to ignore there. That's something to keep in mind. This chart is telling me that we should be looking for short entries more than long entries. It's a bit contrarian though to the current sentiment. That might be a good thing. Diving a bit more deeply into Bitcoin. This is my cycle analysis chart, and if you look at these, all these stars, let me just take the drawing tool. Bottom cluster here, top cluster there, top cluster there, bottom cluster here. Keep in mind, from when the bottom stars begin, there was still pretty much a 50% move to the downside, but in the big scheme of things, it's been pretty close in showing you warnings that we might be at the top or we might be at the bottom. But this is on the 3-day chart. Also here and there, pretty much perfect calls here, perfect calls. And now we see a bit of the same picture as we saw here. A few stars starting, then the final capitulation to the bottom here of this channel. Obviously the COVID crash was not in the charts there. We're now seeing a bit of the same cluster here, a final dump and more stars here, but we haven't quite yet reached this bottom of this multi-year channel that has been respecting quite nicely. 1, 2, 3, 4, 5, almost the 6th data point on this channel. Smaller time frame, we have some patterns in a pattern in a pattern. We have the channel here, then we have this expanding range here that started in last year, so this has been the range of the year, and then pretty much in the last month we've been seeing a bit of a falling wedge here. What are the likely possibilities here? And I'm going to draw, where is my colors? I don't see the colors. Likely we will go somewhere, dip here, and then probably come back. That's the worst case scenario. Let's put it in red. And the best case scenario is we break this wedge somewhere here. We go back to the start of this wedge, which also aligns with this higher time frame expanding range. We backtest it and we start slowly crawling our way back to this middle line to the 50k. I'm drawing this in pretty short time frame. Keep in mind this could take a big chunk of 2023 to play out, so maybe I should just draw that a bit more time realistic. Now we might get another bounce here, finally break down to somewhere in this major zone. We mess around there for a while, we go back into the channel, we start slowly to move upwards towards the end of 23, 24. That's the worst case scenario, obviously. The best scenario, if the Fed actually pivots, we might go a bit somewhere between, break this zone, confirm it, go sideways a while before moving back higher. So likely scenarios, and I think if you look at this zone where it came from, obviously we overshot there, then we had this January, February 18 peaks and the bear market, then in 19 we hit those levels again, we wicked above it slightly and playing around. Here in October it was resistance, here in February 20 it was resistance, in June 20 was resistance. It broke to the top of the zone here in August and went back to it, testing it as support before the run. So very important level between that 10.3, 11.2 range. Pretty small range for something that historically proven. So I think this is a very nice buying zone. The ultimate buying zone, I think everybody is pretty much expecting. But don't neglect this scenario, always look at the both directions. If the Fed actually pivots, stock markets go on a run and the macroeconomics will stabilize on all the free money. Again, we might see 50k, the middle of that range, quite a bit sooner than with the worst case scenario there. I'll save this one for future reference. Looking at a different chart, we had our hash driven buy signal here that has not played out yet, but we also cannot say that we dumped crazily below it. We do see some overbought signs here just before this last dumps. These have been pretty accurate in the past. This one, I'm just going to give it a bit more space. We are not on this oscillator, we have not reached undersold zero yet. We're close, we were really close, so might be a local bottom, but there is still a bit of space left. We go, obviously the COVID crash was below it, this local bottom here that we backtested and went up. Here it went below zero, had one more leg down quickly before starting to go up again. Also here we reached the oversold on this little dump, oversold on this dump, oversold on this dump. So pretty much all the major bottoms, the V-shaped recovery, the real capitulation and the V-shaped recoveries that we had in the past were pretty much signaled by this indicator on the daily chart being oversold. There is an argument that this was the oversold dip and this is just the backtest of that level, but because of the whole FTX scam it overshot the previous low. So there is a slight case for that possibly, but I think looking at this chart there is still definitely 15.45ish in the books, maybe even this major buying support zone here. Let's see what the Fed doing. Don't fight the Fed, and hopefully with the recent developments this is the end of that Fed storm, that no further exchanges will go down, no further scams being revealed or anything crazy. Then this could be a very valid scenario. We do want to first reclaim this descending trend line that would sit currently at about 22 20 to 25k by the time we reach it, and then the next level is that 24 to 23k to get above. So quite a bit of work to be done, either in both directions. A bit shorter time frame, the 4-hour chart. Let's scale it up a bit. With the sideways, there is an argument for what's the pattern? I think 3 crows, 3 white soldiers, 3 red soldiers kind of pattern. I forgot the proper name. We have a big candle here, 3 big upward candle here, 3 downward candles that were smaller, staying within the range of that candle, and now we are waiting for a break above this trend line here, that 17.5, 17.6 is. If we break that and confirm it, we'll also be going above this very important GAN line that comes from the top in August 22, and we see a lot of confluence here of the different GAN lines here. That would bring us in the end of this month, so a lot of confluence there, so this might be a nice bounce point. We see we are a bit getting stuck in between those, so in the next few days, maybe a week, I do expect to break out of this little GAN trap here. Very important one to break is this double GAN line here, that's currently at 20, just above 20k. And my voice is holding up pretty well the first 30 minutes. Lowest time frame, let's go to the 1 hour. We had this nice higher low here, and we tried to pierce above this range, but we failed. But you see, we had a rejection at the bottom, we had a bit of rejection at the top, so it's trying to build up some pressure to break through this zone, but we really need to break that 17,200-ish, 17,250-ish level, and preferably break above that 18.2k before we can say with a bit certainty that we are starting to flip to a more upwards trend again. Then the big test is obviously that 19.6 to 20k level. So pretty neutral at the moment. Could be something like symmetrical triangle there on the 1 hour. That's waiting to break. One, two, three, four, five. It would be nice to see a third touch of the bottom, making the third higher low. Symmetrical triangles, neutral in direction, pretty much 50-50, but it has a bias for the trend leading into it, so in this case downwards. If we break today on the PPY numbers, we will hit that resistance zone perfectly. And let's see the bearish scenario there. If we break also today, it would bring us to below 1300s. Is there any confluence there? Probably have to look at the... Oh well, that 1300-ish is halfway the Fips, not really. It's the peak from June 19 that was around that almost 14k, so 13.8 is probably much the downside target for this move. So a bit less than, you might argue that we had a fake out, making this a bit more symmetrical, and if we move down we have more confluence with that support level. We would need another low to confirm it, either on that 16260 or just above that 15800-ish. So pretty much the bottom of the triangle is not yet determined. The top is, we have the 3 touch points, but I would like to see a third one to know, is it this support line or this one that we have to break out of. Alright, 30 minutes in, I covered all the charts that I wanted to cover. Let's see, in about 3 hours we have the PPY numbers, and that will probably trigger the breakout of this low time frame formation, either towards 19.5, 19.6 or towards 13.8, 13.7-ish, that 1400 bottom there. Tradable pattern, but be aware, PPI numbers and stuff like that could cause very violent fake outs, and especially on this low time frame, it would not be the first time that we would hit both targets within a day. That's not unthinkable in the current market. So I won't trade the volatility actually this week with the whole elections and all this stuff of the whole FTX scam fiasco. I'm pretty reluctant to start any new trades. Still have a short open from this CZ peak here. Partial part of that short, and stop loss is way in profit, it's just above here. I'll keep that one open, but the market is a bit too crazy for me to trade anything there. Gold, let's see. Gold on the 1 hour is pretty much madness. Let's go to the daily. It has been performing pretty darn good, but we do have a count 8 on the daily. Again, inverse to the DXY. But we also see we have not reached that 1800 resistance yet. So this would be a nice level to watch. 1800. Let's see if we can mark it. Be precise. 1800 is the level to watch, because if you look in history, resistance here was briefly support here with the indecision candle exactly on that level, broke it, it was support there. It has been this zone where we went up and down for a month. It was resistance there before we broke it, it was support here twice before we broke it, also here, also there. So there's a lot of confluence on that 1800 level. Nice rally, but pretty much only because the DXY is going down. We failed to make a higher high here, which was really a bit disappointing. So see if we can break above that 1800, confirm it, go sideways a bit and continue towards that 1875, 1900 level here. That will be a nice first target to get a bit of a confirmation of the trend reversing. But as far as I see, this is pretty much only the DXY move there. like if you compare it to the euro, you see that we haven't been really doing that much. We went up and we're just in a descending channel since March this year. And if we do gold divided by the DXY, we get some interesting stuff. See exactly the price in it's only the DXY that's fueling this move. Sometimes it's just nice to compare assets like the Bitcoin to gold price. See, as gold has been outperforming Bitcoin recently on this FUD dip. So pretty much, yeah, gold rally purely fueled by the DXY. Pretty much the inverse. The move in gold is purely fueled in this one. So, all right. No more charts to look at, I think, for today. Thanks for watching. Trade safe. It's crazy week, so I'd be careful taking trades. I'll see you guys next week, and for the VIPs, I will be streaming later today about the FlexPot entries. Alright, trade safe and take care.